crypto markets crash over the weekend after Bitcoin breaks below the key 53,000 level. Weak hands are liquidated as 25% of futures open interest gets wiped out. ETH doesn't get the memo as the ETH Bitcoin spread continues powering higher. All this and more in this week's Crypto Insight. So crypto this week, what were we saying? We were saying that we were very worried that if 53K was broken, all hell was going to break loose. I think we can safely say all hell did break loose. The reason I was concerned was that was kind of an area where there was a fair amount of short-term entry into the market, which might then puke those longs in a break of 53 to 50K, that kind of area, right? I felt like it's probably where there was going to be some stops, okay? That was just from a positioning standpoint and what we'd seen from the on-chain stuff. And then also from a technical perspective, if you look at this chart, I was looking for a 5-wave move up to 80K into year end, but that 5-wave sort of count was negated if we broke below 53, because that wave 1, we were going to have overlap with our wave 4 and that wave 1, and that basically means that count is invalidated, right? So that's kind of what we got. So now I'm reevaluating what this Elliot count should look like, and I'm suggesting that it's a larger degree 4th wave correction that's still happening. And you could say that from the initial sort of April highs down to those summer lows, that was our first larger degree A wave in the correction. Then we had a ABC to complete that B wave up. And now we're starting our C wave decline that will complete the larger degree correction. Okay. That would be, for me, the most likely Elliott wave setup now that makes sense. Okay. If that does make sense, then that move we had over the weekend was some kind of 3rd wave sell-off within this larger move down, which is a C wave that could complete anywhere between 40K and 30K, let's say, somewhere in that zone, right? So for me, I think that scenario is very much alive. It's not a scenario that I just want to be long into. So I have de-risked my book quite massively in terms of crypto, because, unless I start to see price action on the upside that confirms that this was it, it's the end of a correction, which I'm waiting for, which will have to be price action above 60 grand, I would think, in Bitcoin. For now, I don't see any reason to be overly long, right? So I'm nice, I'm well hedged up, basically. On the flip side, on the more bullish note, is Ethereum, right? Because you don't often see Ethereum breaking out to the upside on a relative basis whilst crypto's selling off. So this is a bit of a different dynamic here that we haven't seen in a while, right? Normally, ETH has got some beta to the downside when crypto gets smashed. ETH's ignoring this. If anything, it's the ratio ETH to Bitcoin is breaking higher above this key 0.08 level whilst crypto's selling off. I didn't expect to see that. So, let's see how this plays out. But that is something to keep an eye on, that ETH outperformance in the face of a weak Bitcoin. I feel like if Bitcoin does roll over again down to 40K, then there may be a bit of a catch up lower in ETH. So I'm kind of wary of that. But it is an interesting move that we're seeing, right? And one that kind of slightly caught me off guard. Yeah. What are the on-chain metrics saying? You've had obviously massive futures liquidations, right? So massive liquidations, about 25% of the open interest, which is pretty crazy. 25% of the open interest across all exchanges in the futures got wiped out. And we're talking about 5.4 billion worth of futures liquidations. Okay, so that's a pretty dramatic liquidation. And what do we often see when that happens? We see the funding rate on the perpetuals go negative. We did see that. So you see on the right hand side, first negative funding rate since September. It went down. It's kind of reset, flushed out all of those, and it's kind of about back to close to flat now. Yeah. So the kind of price action that we've seen in the funding rate is similar to what we've seen in previous flush outs. Okay. You've also got, you know, this data here showing realized losses being taken in order of magnitude of 3 billion, right? So pretty massive losses being taken here. The short-term holders, same thing, looking at the on-chain stuff, you know, they've been taking losses, right? They've been spending coins, but in a loss, realizing losses, okay? So definitely evidence of the weaker hands that kind of entered this market when we were in and around those highs above 60, 65K, basically, you know, throwing in the towel, yeah? So the coins being passed over to stronger hands, which, you know, is usually a good thing, right? I guess the question really now is, do we need to see some more weakness to actually flush out some of those, you know, stronger hands, right? And that's what remains to be seen. Okay. What else? If we want to look at now the volatility side of things, what's been happening there. So finally, some realized vol, right? We had a realized uptick to, you know, more like 100. If we look at short-term realized 10-day, and implieds have just kind of, those implies don't show the intraday spike, but if you look at kind of 1 month implies, they've been hanging around that 80, 85 region. Another way of obviously seeing this is through this sort of volatility cone that we've shown before. So on the vol cone here, you can kind of see the blue line representing the current realized, and on a 7-day window, that's popped to even be above the 75th percentile, right? So a decent pop in terms of 1 week realized. 14 days a little bit sort of in the middle between 50 and 75, and then those longer term metrics are still kind of, you know, where they haven't gone crazy. Yeah. So realized vol obviously exacerbated by that crash that we saw over the weekend on relatively lower liquidity as it tends to be at the weekend. What happened to the term structure? Should be no surprise that it inverted. But these inversions seem to be, you know, shorter and shorter lived, right? So we went down to 42K in the sell-off, and on the right you can see that the curve went from the pink quite extreme contango to backwardated, where the 1 week stuff was trading at, you know, over 100 vol, and the curve was pretty flat after about 1 to 2 weeks, and then we bounced back to 50K and it's like completely collapses. So the current curve is the pink curve on the left. It's kind of shifted higher. If you compare it to a week ago, the whole curve is a little bit higher, with the front now in the low 70s and the 1 month stuff kind of in the low to mid 80s. But it is just quite amazing how quickly that sells back off again. You know, I was looking for a little bit more. If we got that break of 50K and that swift move down, I was looking for a bit more of a persistent bid to vol. I think had the market stayed low, that there would be more nervousness, but that knee jerk back to 50K has kind of given the market a bit more comfort, and the vol has sold back off again. Yeah. But like I say, I was expecting, whilst the 1 week stuff went to over 100 vol, I was expecting the 1 or 2 month stuff to react more than it did. And it just kind of hung in there at 85. I think part of that is because it's been trading at a premium. It's been hanging in at 80, 85, while the realized has been 50, 60. So it's been trading expensive. So then when you suddenly get a move in the market, the idea is, well, it's been trading expensive at 85 because we've been waiting for this type of move. We don't now need to go and reprice it up to 100, basically, right? We need persistent realized in the hundreds for it to then say, okay, this stuff's actually worth more, right? And we're yet to see that, basically, right? I do think there is potential for us to see realized staying a bit stubbornly high now that we've broken down. And if that kind of fourth wave scenario that I'm describing plays out, and we get more weakness down to 40K, heaven forbid, even 30K, then realize it's going to stay high. And then you might reprice that vol, right? But for now, the market's not buying it, basically. Yeah. Another nice way of looking at the vol, obviously, is this one that is good to kind of observe. This kind of just shows each individual expiry tracking along over the last month and what it did. And you can see the pink is that explosion in the 1 week stuff to like 110 or above. And you can see what all the other expiries did in sympathy with that. And whereas the 1 month, you can see the 1 month pop from about 75 to around 85. So you got about a 10 volt pop, which is okay, but you know, it's one of those things, it faded back down pretty quickly, right? So you can see that sort of time series there of the vol. Obviously, the next thing to monitor, I mean, again, it's been heading towards puts for a while as the market's been more nervous of corrections, but now literally every single expiry is puts over, right? Even if we go out to the longer dated, right? And that's fairly rare, right, to see that in Bitcoin. So really seeing the need for put protection across the whole curve, or people just, you know, selling those longer dated calls out that they either bought or selling them out as a way of funding protection, basically, right? But certainly no bid really on a relative basis for calls anymore. In terms of, now that's general, right? That's where the skew is. Skew is now priced more towards puts. Now, funnily enough, we did see a few prints go up that were playing it more from the bullish angle, right? So you had, in Bitcoin anyway, you had the 80,000 in Jan, 80,000 calls in Jan being bought and 70,000 calls in December. So that saw some reasonable prints there going up. And if you look at what's going on in terms of the paradigm flows, the block flows, that is skewed to calls, right? Now, whether it's call buying or selling kind of remains to be seen, but you can see here, calls are like 70% of the blocks that are going up in paradigm, right? So now the trades that people have been doing are quite similar to the trades that I've been doing previously, where they're kind of trying to buy December and January calls and they're using longer dated calls to finance it. Yeah, we definitely saw that in Ethereum, where, you know, people are buying December. This is quite evident here that the flows in December in the bright red, in this kind of 6,000 to 8,000 area, calls going up in December. And then there's a big February, 25th of Feb next year, this big yellow bar is a sell of calls to finance it, right? Similar to trades that we've been suggesting, being long deck and short March or long deck and short Jan, trades like that I was using the skew to get long, because those upsides trade quite expensive. People are doing similar trades again, right? Me personally, like I said, because for me, the scenario is a bit more bearish now on crypto. I'm not as bulled up. I'm not entering a lot of those trades. I've rolled out of a lot of my December longs because I think they're now too short dated to really play out. But I think, you know, if and when I get bullish again, I'll still be looking at those type of structures because I expect March to remain stubbornly bid because of all the flow that's gone up in March. I think those March 15,000, 12,000 area calls are going to stay very elevated in vol terms. I'll probably be a seller of those, and I'll probably be a buyer of January calls if I do get bullish in that sort of time frame, basically, right? So, but right now, I'm not really expressing the view in those call spreads right now. I've de-risked my crypto book a lot. I'm just kind of battening down the hatches and just waiting for a bit more clarity on the technicals, and also a bit more clarity on macro fundamentals, right? Because if people are calling crypto an inflation hedge, then they might be a bit worried when they see charts like this one. If we look at what inflation swaps have done, now that the Fed is like becoming a proper, or claiming to be a proper inflation fighter, that doesn't paint a particularly rosy picture, right? You've got the Ethereum price chart here. Superimposed on that, you've got US two-year inflation swaps with a 1 week lead. That's been tracking pretty well throughout the whole year, okay? Now, I was skeptical as to whether really, you know, crypto is an inflation hedge or whatever. You know, it's kind of 1 week it is, another week it isn't, whatever. But this is quite a strong correlation we're seeing in this chart. And on the back of what happened last week, inflation absolutely rolled over, right? So that could argue that ETH's got some room to go down. And until we see like a print sub 3,000 on ETH, I'm not entirely sure I want to be picking any up right now. Yeah. So that's just something to be aware of for those guys who are thinking that this is the greatest inflation hedge in the world. Well, inflation just did that, right? So just be aware. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.